Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me today is Vivek Iyer, and it's a good start to the trading week. The Nifty is holding above 25,300. The sensex has surged past 82,500, and this is the fifth consecutive day of record highs for our markets. Now, very, very strong. In terms of absolute points, it's about 78 points. And on the Nifty, it's a 0.3% gain. The big winners are the Bajaj twins, the Bajaj Housing, Bajaj Finserv and Bajaj Finance. ITC is contributing in the way up. HCL Tech is also higher in trade. Hi.
Good morning, Reema. Fifth consecutive day of record highs and 13th consecutive day of gains. It's the first time in over 3 decades that we're seeing. It'll be important to see whether this can sustain and whether markets can continue their march forward. Remember, one particular trigger for the markets moving higher in the last couple of weeks was the very big inflow, high liquidity inflow that we were seeing as part of the MSCI flows. Now that particular event is past. Now we'll have to wait and watch by for fresh triggers. But quite a lot lined up on the show. Let's start off with the top headlines.
Okay, no headlines at 11 o'clock, but let's talk about the auto sales numbers because they're out for the month of August, and it appears that two-wheelers and passenger vehicles have done pretty well. Sudarshan joins in with the details. Sudarshan.
That's correct. So two-wheelers have been the biggest outperformers, and in the four-wheelers, passenger vehicles have outperformed and have done better than commercial vehicle segment. In two-wheelers, all three companies, TVS Motor, Hero MotoCorp and Bajaj Auto, have reported sales much better than estimates, and total sales were up in the range of 5 to 16% year-on-year. And with motorcycle segment continues to lead the growth for all the three companies. So starting with TVS Motor, total sales were up 13% year-on-year and 11% month-on-month. And two-wheeler segment, both motorcycle and scooter segment have reported double-digit growth. Hero Moto total sales were up 5% year-on-year and 38% month-on-month. And here motorcycle segment has seen a growth of 6% year-on-year and 41% month-on-month. Even outlook given by the company is positive. Company says it expects strong growth in the upcoming festive season. For Bajaj Auto, it was a strong set of sales. All the segments have reported a growth and were up in the range of 5 to 24%. With two-wheeler segment continues to lead, it was up 18% year-on-year and 13% month-on-month. Even three-wheeler segment for Bajaj Auto has seen a growth. It has seen a growth in the double digit. In four-wheelers, starting with Tata Motors, sales have missed estimates, majorly dragged by commercial vehicle segment. For commercial vehicles, except passenger carrier, all the segments have seen a drop year-on-year. CV sales were down in the range of 21 to 23%. For Maruti Suzuki, sales were in line with estimates. Talking about positives for Maruti Suzuki, utility vehicles, majorly SUV, have seen improvement both year-on-year and month-on-month. Even sales to other OEMs remain more than 10,000 units on a monthly basis. On negatives, compact segment, this segment remains under pressure. That is basically starting segment remains under pressure for Maruti Suzuki. For M&M, it was a very strong set of numbers, both on tractor side and as well as the auto segment. SUV continues to lead the growth here. Tractor were slightly below, but it was in line or slightly higher than estimates. Total sales were up 9% year-on-year and 16% month-on-month. SUV sales, which was very strong, gave a growth of 16% on a yearly basis.
Thank you so much for that, Sudarshan. Well, M&M's August auto sales, which have come in above estimates, were driven by SUVs. The CV segment witnessed a sharp rebound month-on-month, but tractor sales are below estimates. Earlier today, we spoke to Vijay Nakra, the President, Automotive Division at M&M. Listen in.
I think what's augured well is as we start moving up to the festive season, we are seeing inquiries go up. That's one. Two, also the numbers that we have delivered in the month of August are backed by retail. So it's not just building in stock for the festive season. If I look at the Vahan registration data for the month of August, if we add Telangana, which accounts for about 4 to 5% of all India retail, we're at 98% of our wholesale numbers. And we've actually gained about 2 percentage points share on the retail front. As far as the overall numbers is concerned, we had said that we have a capacity of 9,500, fungible between both the 3-door and the 5-door. That's right. 16th is when we start test drives, and 3rd of October is when we open bookings.
Okay, we'll slip into a very short break. We'll come back and focus on the big story of the day, Gujarat gas. That's surging following a major restructuring announced by the Gujarat government. which proposes a merger of GSPC, Gujarat State Petronet, and GSPC Energy into Gujarat Gas. We'll get to the nitty-gritties of this. We'll also invite Maulik Patel of Equirus Securities on the other side. Stay tuned. Welcome back. Oil marketing companies are also surging in trade today. We've seen a decline in crude prices. They were at $80 plus just towards the end of last week, and now Brent is down to $76 per barrel. HPCL leads with a 3.8% gain. IOC is higher in trade, and HPCL too is having a pretty good run. Zee Entertainment has seen a bit of an up move in the last few minutes. Last week, the big news was all the litigation, the overhang of the Sony-related merger was now settled, and Zee Entertainment has been moving. Today, it's up close to about 1.5%. But as promised, let's get to the big story of the day, and that's Gujarat Gas surging following a major restructuring scheme which proposes a merger of GSPC, Gujarat State Petronet, and GSPC Energy into Gujarat Gas. Nimesh is the one who first highlighted it. He's been talking about this in D Street Chatter, and now it's been announced. Nimesh.
Well, Rima, so all the actually Gujarat-based companies are in focus today, and big move in Gujarat Gas as well as in GSPL. As over the weekend, there was a big restructuring which was announced between all the three gas-based companies. So what the restructuring is all about, basically they've done this to simplify the holding company structure as well as value unlock for the investors in GSPL. Now, if you look at the structure, what have they announced is GSPC and GSPL both will be merged into Gujarat Gas. So that's it's basically in three steps. The first step is Gujarat Gas. GSPC will be merged into Gujarat Gas. The ratio has been flashing here. 10 shares of Gujarat Gas for 305 shares of GSPC. The second step will be the merger of GSPL, which is a listed entity, into Gujarat Gas. So again, there the ratio is you'll get 10 shares of Gujarat Gas if you're holding 13 shares of GSPL. And the third step will be after these two mergers, GTL, which is a trading company, that will get demerged out of Gujarat Gas, and the ratio there is you'll get 1 share of GTL if you're owning 3 shares of Gujarat Gas. So these are the 3 steps wherein all the entire restructuring will be done within the Gujarat-based gas companies. Now, what this means, first I'm talking about the existing structure. When I'm saying this will ease the holdings, the entire structure within these companies. The existing holding was like this. Government was holding close to 55% in GSPC, which is unlisted, and then in turn GSPC was owning 37% in GSPL, and GSPL in turn was owning close to 54% in Gujarat Gas. This was the existing structure. Now what the structure changes, there will be two separate entities. One will be Gujarat Gas. In Gujarat Gas, there will be city gas distribution, gas trading, E&P and renewables business, as well as the related investments. This will be one entity, which is Gujarat Gas post the merger. The other entity which I explained is GTL. Now, this is the trading business of GSPL, which will be carved out separately and listed separately. This will have the gas transmission and the related investment business in GTL. So that's the structure, what's been proposed now. What are the analysts saying? From a brokerage point of view, Antique actually, a couple of brokerages have raised the target price on Gujarat Gas, and that's the reason why I've seen a big reaction in Gujarat Gas. Antique believes that this is value accretive from day one, and they've raised the target price in Gujarat Gas to 726. Even Equirus believes that it's a well thought merger, and hence they've upgraded the stock to add now, and even they've raised the target price there. So there are some who still have skeptics, something like Jefferies. While they've raised the target price on the merged entity to 530 odd rupees now, but they believe that there'll be some concerns on the margins profile for Gujarat Gas, at least in the near term. So that's some bit of negative view as well as far as Jefferies is concerned. But broadly, if you ask me what has been achieved by this, one, simplification of the holding structure between these Gujarat-based companies, and two, a potential value unlocking for GSPL, because GSPL holding company structure will collapse, and also going forward, GTL will be separately listed, and where you'll get the shares as well.
Thank you so much for the information and breaking down this very complex deal for us. To discuss this and more, Maulik Patel, Head of Research at Equirus Securities, joins us now. Maulik, you've been quite bullish on this particular deal. In fact, you've gone ahead and upgraded Gujarat Gas today. What is your rationale for the same, and why do you say that this is EPS accretive from day one?
Good morning, Rima. Good morning, Vivek. Thanks for having me. See, it's a very well thought merger from one more perspective. Government of Gujarat was looking to do the IPO of GSPC in 2010. Now, with this merger, that GSPC, which was an unlisted company, has become a part of the listed entity. So that is also resolved. Second point is that there were some 7,200 crore of carried losses on the books of the GSPC, which are supposed to expire in this financial year. Now, with merger, that period will be extended, and both the entities, GSPC and Gujarat Gas, their profit will be out there to absorb this carried losses. So that is the one reason why it has been EPS accretive from day one. So our FY26 EPS comes to around 37-38 rupees on a pro forma basis, on an extended equity base. But FY27, when the tax credit, this carried losses will go away mostly, the EPS will come down. Another point I want to add that Gujarat Gas, after this merger, will become a second largest integrated gas company in the country after GAIL. So that will attract, and they have a lot of synergies in terms of trading and this one. So far, if you look at, the trading was happening in GSPC, CTD was part of the Gujarat Gas, and the transmission was part of the GSPL. There were a lot of related party transactions between the GSPC and Gujarat Gas. So after this merger, those related party transactions are also not there. The Gujarat Gas shareholders will definitely benefit from a larger entity. The free cash flow of Gujarat Gas, if one exclude the transmission part of the business, will be close to 2,500 crore rupees. Both the companies are currently having a cash on the books of close to around 3,500 crore plus, and that will grow further. So they are adequately funded from an expansion of further any capex that they require to do in the gas infrastructure or in a renewable part.
Sure. Maulik, thanks for joining in. You nicely explained what it means for Gujarat Gas, but if I want to ask you quickly what it means for GSPL as well, and what is the value that you're ascribing to GTL, which will be eventually demerged and listed separately? So
if you look at the history of GSPL, it has always been a very deep value buy stock for us. And one of the reasons was that holdco discount was almost 50 to 70%. So today, GSPL owns 54% stake in Gujarat Gas, and market was not ascribing that value. The stock obviously has run up something in the last 1 week, close to around 25% or so. So after that, the holdco discount has narrowed down to 15-20%. Now, investors could have asked for a little more, that holdco discount should have been zero. But I think this is the best proposition that they are getting it. The demerged entity, GTL, will have two assets. One is the transmission network, gas transmission network in Gujarat. And then there are two cross-country pipelines or JV of the GSPL, which is called GTIL and GITL, which is Mehsana-Bathinda pipeline and Malwada-Bilwa pipeline. So GTL will have two assets. Plus, they will have close to 1,500 crore of cash in the books, which they are currently holding. That cash will go for their capex. Company has some close to around 3,000 crore of capex to be spent over next 3 to 4 years. So GTL value, in our view, should be close to around 9,000 crore. If you look at from a Gujarat Gas share perspective, which they will get it, probably close to around 100 rupees per share should be the value of the GTL for the Gujarat Gas shareholder. Also, one of the things important is for GSPL shareholders to look at is that the tariff of the GSPL, which was reduced in April 2024, there is some kind of possibility for the tariff revision because they have appealed it to the APTEL and Delhi High Court. So if they get any favorable verdict from that, there's a possibility of further upside in GSPL.
Okay. Maulik, one quick question. Eventually, shareholders in India will have a choice between GAIL and Gujarat Gas. You said Gujarat Gas is going to be the second largest integrated gas player after GAIL in India. How do the valuations between the two stack up, GAIL versus Gujarat Gas? And which one would you recommend and why?
So obviously, GAIL is a much larger entity. Yeah. In terms of, if you look at the transmission volume, which GAIL does is 130 mmSCMD. GSPL transmission value was around 35 mmSCMD. GAIL do trading of close to 100 mmSCMD. GSPC was doing the trading of around 11-12 mmSCMD. They were peaked at around 18 mmSCMD a few years back. So GAIL is a much larger. Now, but in the GAIL, we have a petchem asset also, which is not creating or not generating enough profit in the last couple of years because of the high spot LNG prices and that. Plus, they have some capex plan or more capex plan in the petchem. So investors have some apprehensions about the petchem profitability, which has been very depressed for most of the players, including Reliance and others, that GAIL is investing more and more in petchem. And so I think probably, if you ask me the thesis is that the spot LNG price will come down in 2026, 27 will go significantly lower because of the global LNG supplies coming up. Both will benefit it. We have also buy rating ad rating on GAIL. But if you ask me today from a longer time, 3 to 4 year perspective, Gujarat Gas has a relatively cleaner structure as they do not have any petchem business into this currently.
Sure. Maulik, lastly, just to take Rima's point forward on GAIL, I was reading with this merger and the demerger of the gas trading business within Gujarat Gas, is that a regulatory requirement that they had to do this demerger? And if so, do we expect similar, kind of demerger happening in GAIL as well? The trading business will be separated and will be demerged. And will that will that actually lead to a bit of a value unlocking for GAIL shareholders as well?
So there is a concept from the PNGRB regulator. The concept is called unbundling, where your transmission asset and trading asset should be in a different company. The concept currently, if you look at for the GAIL, both transmission business and trading business are part of a similar company. They are both divisions within the GAIL. There were some thoughts at a ministry level and has been in the public domain that GAIL should demerge their trading business into separate company because it's a conflict of interest between the trading and the transmission. But today, there is no such regulatory requirement for GAIL to do that. The concept is available in a PNGRB's public domain. It's a regulator's job to do that. But as of now, there is no regulatory requirement for GAIL to demerge it. What we can say that today, because we both are a combined entity, both are part of the same company. GAIL is in a better position. They can leverage that. When they will become a separate, probably consumer will benefit more than what GAIL can benefit to.
Sure.
Okay.
Got it.
Thank you so much, Maulik, and thank you so much, Nimesh, for joining us and giving us all of those details. Let's now slip into a short break. When we return, we will discuss market technicals with Soni Patnaik and also discuss their top trading bets.
Welcome back. The big development over the weekend was that SEBI has announced a formal revision of the thresholds for stocks entering and exiting the F&O segment. So they've updated the eligibility criteria. This means a lot of stocks will be in and some stocks will come out too. Nigel joins in with the details on this. Nigel.
Well, SEBI has announced a formal revision of the thresholds for stocks entering and exiting the F&O segment. The notable changes in the methodology was on the median quarter sigma order size requirement, which has been increased from 25 lakh to 75 lakh. So that's the first point. Second point is the market-wide position limit has been revised from around 500 crores to around 1500 crores. And finally, the average daily value over the last 6 months has been revised from 10 to 35 crores. So those are the top 3 points. Now, SEBI has also said that once a stock is excluded from the derivatives market, it shall not be considered for re-inclusion for a period of 1 year. Now, based on these new criteria that have been laid out, Nuvama has stated that they understand that the exclusion review can occur in December, and the exclusions from the derivative segment will take effect only in February 2025 or after that as well. They believe that 18 stocks have a strong chance of being excluded from the derivative segment, and the list comes up for you on the screen. Now, moving to the inclusions. Commenting on the inclusions, Nuvama says that close to 80 names could qualify for F&O inclusion. And some of the notable names, they are up for you on the screen. They also add that it seems clear that SEBI intends to include new stocks in the derivatives market, and they believe the new inclusions could be announced in the next few weeks or the next few months. Nuvama also says that Jio, Financial, as well as Zomato, they are the strong contenders to make it to the F&O segment. That could propel them into the Nifty in the next rejig, that's in 2025, though the final decision rests with SEBI. So that's what the changes were and what it implies.
Thank you so much for that, Nigel, for breaking down, what could actually happen once this particular SEBI F&O guideline comes into effect. But right now, we have Soni Patnaik from JM Financial Services, who joins us for a quick technical check on the market. Good morning, Sony. Thank you so much for joining us. What's your take on the market? 13 straight sessions of gains as far as the market is concerned. Do you see further upside?
Hi, good morning, everyone, and thank you for having me on the show. I think today we can see a lot of aggressive open interest additions taking place at 25,300 straddle, and we can see that there's a barely 20 points movement from this level. So on intraday basis, if 25,280 it breaks, then there can be a profit booking in Nifty towards 25,200, 25,150 range. So I think that's the level to watch out for. Nifty has already approached overbought zones. So there's a possibility that from current levels, it can only move another 50 odd points because it's already an overheated zone. It is wise to just wait for a small profit booking or a small decline to initiate any sort of buy on decline or buy on dip sort of a strategy. As of now, it is wise to watch for the 25,280 levels. There's no, we can see no support from Bank Nifty as such for the day. It's only the NBFCs and the OMC space which continues to outperform the broader markets. And apart from that, the rest of the sectors are lacking that momentum to give the indices that support for any new all-time highs for the day.
So buy only at lower levels, maybe 20, the level you said is 25,280, right? And what would your individual stock calls be then?
Certainly. So, Reema, the first would be a sell in Bharat Forge futures, which has seen breaking the 10 and 20 EMA support today. So, one can sell Bharat Forge futures in September series around 1570, keeping a stop loss of 1585 and a target of 1550, 1540 can be seen for near term. The second would be a buy pick in finance space. Like I just mentioned, NBFCs are seen to be outperforming the broader market. So, M&M Finance is a stock which looks like a strong buy from current levels. It is approaching a multi-year breakout at current levels. So one can buy at M&M Finance futures at current levels in the range between 322 to 320, keeping a stop loss of 315 and a target of 332 to 335 can be seen.
Thank you so much for joining us and giving us the stock call, Sony. Let's now take a short break. Up next, we'll discuss the market fundamentals with Somnath Mukherjee from ASK Wealth Advisors. Welcome back to Trading Hour. As promised, Somnath Mukherjee from ASK Wealth Advisors joins us now to discuss market fundamentals and its top sectoral picks. Good morning, Somnath, and thank you so much for joining us. At the current level of the markets, how do you see fundamentals playing out? Where do you see valuations, and do you see further upside for your top picks or for your top sectors from these levels?
Good morning, and thank you for having me. Actually, from a market valuations perspective, there is very little in the market that could be termed as value, as traditionally value is known. Most stocks, most sectors are trading at either extremely expensive or insanely expensive levels. So it's very difficult to find spots of value. But where we do find interesting opportunities at a relative value perspective are banks and lenders. Some of the larger banks and lenders have not participated as much in the last 2-3 years in the kind of rally that we have seen in equities. And that's one space where we think that there is a significant amount of relative value possible, especially as some of the COVID-related bumps completely wear off in some areas. Some of the government-sponsored CapEx-related bumps hit roadblocks on valuations in certain other areas. And investors start scrutinizing some of the smaller companies a lot more, given where they are trading today, compared to what they were when the rally started, say, 3 or 4 years ago. So at a relative value standpoint, banking and financial services, especially the lending side of it, looks probably the most value part of the market right now.
But do you like NBFCs also? Could you break that out in terms of lending? Would it be just the housing finance category? In that, would it be the affordable housing? Banks and financials is a very large, specter. Right. So drill it down a little bit more for us.
Right. So banks and the lending part of the financial services today has 3 or 4 different verticals, as you mentioned. There's a lending vertical, which comprise banks and NBFCs. And then there is insurance, which is the other big vertical. And then there is a third vertical, which is essentially either market infrastructure or market intermediaries in that third vertical. What I am referring to is the first, which is the lending side. NBFCs and banks are both fairly well positioned for slightly different reasons. NBFCs, because a lot of them are funded wholesale, and we are most likely, in fact, we are almost certainly at the peak, or we have crossed the peak of the rate cycle. And any institution that funds itself wholesale would tend to benefit disproportionately as interest rates fall, as market borrowing rates fall. So that is a fairly large tailwind for NBFCs, especially those that are wholesale funded. Banks, because of two somewhat different reasons. One, from a valuation multiples perspective, they're positioned a lot better than the rest of the market is. They simply haven't gone up in the same proportion as a lot of the other patches in the market. And second, credit growth remains a secular compounding story. It's not predicated on massive amounts of growth. So the earnings underlying those multiples are not predicated at the sort of 25, 30, 40% year-on-year growth that some of the other patches are predicated on. And that level of credit growth is very visible in the environment. So put both of that together, we think that lenders are a good patch to be in today.
Understood that, Mr. Patnaik. And any preferences within the lenders? Do you like the PSU names? Do you like the private names? Some of the private names haven't really performed. And apart from the BFSI space, which other sectors do you like currently?
I wouldn't be able to talk on specific stocks, but I would say across the board, from the NBFC side, preference is for wholesale funded NBFCs. On the banking side, preference is for the larger banks because larger banks have a greater runway or greater ability to expand balance sheet at the expense of some of the others. As it is, there is an RBI-induced slowdown in deposit growth, and hence have the ability to create that secular compounding a lot better than some of the smaller banks. So I would privilege the larger banks and wholesale funded NBFCs on the lending side. Besides lending, the other space where there could be some opportunities going forward are on the consumer side. Early days yet, if we see a certain amount of pickup as some offshoots of or green shoots of data seem to suggest, a turnaround in consumption, especially with some level of pivot towards greater welfare spends coming in from both the union budget as well as the different state budgets across the country, then there could be an incipient opportunity on the small ticket consumption side as well. But that's something that we need to wait and watch and see how they pan out. It's not something that is as obvious and evident from a relative value perspective as lenders are today.
Defense, power and railways, Somnath, these were the big wealth creators. Where do you stand on them right now?
Three very different sectors. Almost all the investable companies in these sectors have the overhang of a terrific amount of earnings growth underpinning the kind of multiples they are trading at. Will they continue to deliver the sort of returns that they have over the last 3-4 years? Who knows? I mean, that's a bit of an open question, but from a pure margin of safety, relative value perspective, they're certainly not where they were 4 years ago, and they're certainly looking a lot less relative value compared to some of the larger companies, some of the, certainly the banking, financial services pack today. Many of the defense companies are discounting, for example, earnings growth that are way disproportionate to, say, what India's growth in defense expenditure is. Just as as a broad macro backdrop, defense expenditure in India grows at a roughly the same pace as nominal GDP, about 10-11%. Defense capex, which is really the revenue stream for all the defense companies, also grows at the same pace, if not a little lower, depending on the year, depending on whether there are pension liabilities to be adjusted and so on and so forth. So you're talking about a space where the industry revenue grows at a baseline of 10-11%. Now, obviously, there is a lot of import substitution plays that are on, but many of them would pan out over long periods of time. And it's not as if things in defense are so easy to replace instantaneously, an offshore platform with a local platform. So some of the earnings growth predications underpinning the kind of multiples that defense companies are trading at may not be, justified anymore. Exceptions apart at a sectoral level. So yes, they don't certainly look like having relative value as of this point in time.
Okay, thank you so much for joining us and giving us a detailed view as far as markets as well as your preferred sectors. Time now for a short break. On the other side, we'll be joined by Tarun Sawhney, the Vice Chairman and MD at Triveni Engineering, to discuss the recent move by the government to remove the cap on sugar diversion for ethanol production. Stay tuned.
Welcome back. Now, sugar stocks have been in focus after the government removed the cap on sugar diversion for ethanol production for the ethanol supply year 2024-2025, which begins on 1st of November. In addition to cane juice and syrup, mills can also use B-heavy and C-heavy molasses to produce ethanol. All this is a part of the central government's strategy to boost renewable energy and reduce the reliance on fossil fuels. Separately, the government also permitted the sale of up to 2.3 million tons of rice from Food Corporation of India. To discuss more on this, we have with us Tarun Sawhney, the Vice Chairman and MD at Triveni Engineering and Industries. Tarun, thank you very much for joining in. How do you read these two notifications? Because you have both sugar and grain-based distilleries. So what is the impact of the first notification on sugar and the second one from grain-based?
Good morning. I think, I speak on behalf of the entire industry in saying that this is a welcome move. It really reaffirms the central government's initiative to boost renewable energy and to focus on energy security, frankly speaking, as far as the transportation sector is concerned. Now, as far as the first item of allowing B-heavy molasses and juice in abundance, I think that will allow the entire sugar sector to divert all the excess quantums of sugar in the upcoming season towards the ethanol program. And so we're going to see a huge quantum, potentially 60% of the total requirement coming from the sugar sector. And I think that is a return to normal. That's the long-term expectation as well, in my mind, from the sugar sector for the ethanol blending program. The second, of course, recognizes the fact that we do have significant quantums of food grain, especially rice, that are available and with the FCI. And a move to actually allow 2.3 million tons to be diverted for the production of biofuel, again, a very welcome move. And I think it signals the fact that longer term availability of rice could potentially happen in the future. And that's a very welcome move.
So Tarun, you've spoken about the industry, right? What about for your company in particular, Praj Industries? Have you assessed the impact?
For Triveni, I have assessed the impact. It is extremely positive with respect to both these moves. So I think that for next year, we can certainly see a larger quantum of ethanol that is manufactured from B-heavy molasses and from the sugar sector per se. Grain, of course, will play a significant role. It will be focused primarily on maize. But I think that this quantum of rice, I would say about 50% of our grain requirement will come from rice as it's allocated from us. Again, it means that higher realizations, or rather higher contribution levels from both these input streams, from the juice side as well as from the grain side.
Sorry, I apologize. I didn't mean Triveni. It was just a slip of my tongue when I wanted to get your thoughts on the impact.
Mr. Sawhney, just Vivek here as well. Just wanted your sense. A couple of analysts have actually pointed out, for grain ethanol manufacturers like you, initially there may not be so much of a boost coming in, especially from, the rice piece of the news. What is your sense? And the second question is, how are you now projecting revenues, for FY25 after this particular move? What were you working with initially? And will you be revising any, top line guidance for us?
So I think you've asked a very important question. I think the move towards impacting the bottom line will be slow and gradual, but it's certainly a positive move. Now, as I had mentioned, maize forms the largest segment of the amount of grain that we procure. And maize prices, while they have, or rather the ethanol price from maize, while it has increased, that entire increase has been captured by the trade. So it's really not the industry that is able to expand its contribution levels. With the introduction of rice, I see that contribution level will increase because it is at a fixed price, even though the price of ethanol manufactured from FCI rice is lower, the margin levels are certainly higher. I also see that this is signaling to me a new change. And I think when we see the new pricing levels for ethanol from all the various constituents that will be announced before the start of the next supply year, the government will look at the margin for producers. So I see margin expansion very much on the cards as we move into the next ethanol supply year. A big and definitive change from the previous year, or the year that will end, the supply year that will end at the end of October.
Tarun, have you heard anything about a possible hike in ethanol prices?
Well, the hope, of course, is that there will be an increase in ethanol prices. The industry, all the various bodies that liaise with the central government have requested a steep revision in prices so that it boosts investment. I mean, as you know, the target for ethanol blending for this year was 15%. And we're looking at the Honorable Prime Minister's target of 20% in just a year from now. For 25-26, the target is 20%. And for us to bridge that gap, there needs to be further investment in capacity building across the nation. And for that, the most important indicator will be an increase in the 24-25 supply year's ethanol price. And I do think that is a possibility. The quantum, of course, is still being hotly debated. But I expect that over the next 6 to 8 weeks, we will have some very positive news from the central government.
Mr. Sawhney, just moving on, we understand that the IMFL business, of yours commenced operations in July 2024 under the premium category. Most alcohol companies have said that this is the particular segment that's actually witnessing growth. So what's the growth outlook here? What is it that you're targeting? And what are your plans to scale it up?
Right. So this is it's a new segment for us. We've launched two fantastic brands, Crafter's Stamp and Matsya, in the premium segment for sale in Uttar Pradesh only. Uttar Pradesh, of course, being a huge state for consumption of premium branded whiskey. In terms of numbers, it's too early to really report, but the growth in the premium segment within Uttar Pradesh has been absolutely outstanding as customers migrate to better quality products, and the infrastructure within the state actually has really remarkably realigned itself for sales in the premium segment. And I think that Uttar Pradesh will be a real trendsetter, actually, when we look towards the better quality products as far as IMFL is concerned. And we're very happy to be part and parcel of this important segment.
We'll leave the discussion here. Thank you very much for joining in. Some statements coming in from the Congress spokesperson about the SEBI chief. They're saying that, she's been a member of the SEBI since 2017. She got officially appointed as the SEBI chairperson only in March of 2022. But they are, talking about how she has been getting income from the ICICI group over that period from 2017 to 2024. So some allegations coming in from the Congress spokesperson on the SEBI chairperson. We'll try and get more details on that as we progress. We'll slip into a very short break on that note. We'll come back and discuss commodities. We'll invite Manisha Gupta on the other side.
Welcome back to Trading Hour. Let's now shift focus to the commodity space. Manisha joins us, and today Manisha is focusing on crude oil. Manisha, over to you.
Well, the crude oil prices have put in a second monthly decline for the month of August. We saw 1.5% of decline on Friday, and for the month of August, it's down between 3 to 4% for both crude varieties. September hasn't started on a very positive note either. One, it is about OPEC and allies. At least 8 countries within that community are going to be increasing production, phasing out those voluntary output cuts from the month of October itself. While, of course, there is an OPEC and allies meeting for the month of September, further guidance would come in from that. But at this point in time, the industry believes that 180,000 barrels per day of an increase in production is what you could be looking at from the month of October, and there would be gradual increases phased out in the next 1 year. The second important point is about the China manufacturing activity that has shrunk to the lowest in 6 months for the month of August. So the Chinese demand continues to be a concern. Third is about the consumer spending. The data that we saw come in from US, that number is on the positive side. That tells you that perhaps the rate cut that we are anticipating in mid-September will not be 50 basis points, but there is a 70% probability of it being 25 basis points. So because of this uncertainty, and now because we're looking at a lower rate cut, is something that yet again has led to some profit taking coming into the markets. So from 82 to nearly 78, 79 is how we've seen the crude oil prices to decline as well. Of course, the Libya production cuts is one thing that the street is waiting for, and the other thing is the US crude inventories, which also are at a 2-year lows right now. But the street does believe that 80 to 82 on the higher side right now is a stiff resistance, and the markets perhaps could be trading within that 77 to 82 for the month of September as well.
Thank you very much for that. And the much anticipated Bajaj Housing Finance IPO is expected to open on the 9th of September. Tomorrow, the company will announce the pricing details for Bajaj Housing Finance. But over the weekend, the company filed its RHP. Abhishek is joining in with more details from that. Abhishek, tell us about this one.
Well, Rima, Bajaj Housing Finance is one of the rare AAA rated NBFC that's left in the street. So the IPO, as you mentioned, opens on 9th of September, closes on 11th of September. Total issue size is at 6,560 crores, which comprises of fresh issue of 3,560 crores and an OFS, that is offer for sale of about 3,000 crores. Here, the promoter, that is Bajaj Finance, will be offering shares, to offload and raise money about 3,000 crores. Credit rating, if you take a look, Bajaj Housing Finance, LIC Housing Finance and Canfin Homes, they are one of the few left with AAA rating on the NBFC side or HFC side. So PNB Housing Finance, Aadhar Housing as well as Aptus, they all have AA rated entity. And if you take a look, Bajaj Housing Finance, the asset quality is pristine, one of the best in class. So the gross NPA ratio is at 0.28% for Q1 FY25, which compares to the second best of Canfin Homes at 0.91%. Even their net NPA ratio at 0.11% is the best. The next best being Canfin Homes, which is at about 0.49% as of Q1 FY25. The AUM is at 97,071 crores. So this is the second largest HFC after LIC Housing Finance, whose AUM is at a distance rupees 2.9 lakh crore. So if you take a look at the breakup of their AUM as of Q1 FY25, home loans form 57.5%, LAP close to about 10%, lease rental discounting of 19.5%, developer finance of 11.2%, and others at 1.8%. Back to you.
Okay, thank you so much for that, Abhishek. Pharma companies like Biocon, Zydus and Dr. Reddy's are in focus today on the back of fresh news flow. Ekta joins us with all the key details.
Well, yes, I'll start with Biocon, which is in focus as they've received 2 US FDA approvals today. They've received approval for Entresto generic, which is basically a heart failure drug. And they've also received US FDA approval for daptomycin injection as well, which is used for skin infections. Now, additionally, they've received an establishment inspection report for a greenfield API facility at Visakhapatnam, and now the company can basically commence supplies to the US from this particular plant. So that stock is in focus on account of that. Zydus has received a warning letter from the US FDA, and this is for their injectables manufacturing facility. The warning letter was issued to the facility at Jarod near Vadodara, and it does not contain any data integrity violations according to the company. It had received an OAI status, official action indicated status, in July of 2024. So there was an inkling that maybe there could possibly be some kind of escalation. Lastly, Dr. Reddy's is in focus on account of the Chinese regulator suspending the import and sale and use of a drug which is manufactured by Dr. Reddy's. This is after they inspected FTO3 facility of Dr. Reddy's and thought that it did not comply with their good manufacturing practices. So they have basically also cancelled the one status for this particular product for Dr. Reddy's in China, which means that Dr. Reddy's can also not participate in any kind of central drug procurement activities till Feb 28, 2026.
Thank you very much for that. We will wrap up on the show, Trading Hour, on that note. From the entire team that put the show together, thank you for watching.